NVIDIA is creating one of the biggest wealth stories in AI. AMD wants a piece of it, but as data centers face growing infrastructure bottlenecks, one question matters more than ever. AI growth is real, but is Wall Street already priced into much optimism? Hi everyone, this is Stock Market Breakdown. If you want to go beyond just watching price moves and actually understand the logic behind the market, make sure to like and subscribe. Let's dive right in. From a hardware perspective, the gap between AMD and NVIDIA is gradually narrowing. AMD continues gaining traction by offering competitive performance, larger memory capacity, and a growing ROM software ecosystem. But NVIDIA's biggest advantage is no longer its chips alone. It's the software ecosystem built around CUDA. For more than a decade, developers, AI frameworks, enterprise applications, and machine learning tools have been built on top of CUDA. As a result, companies aren't simply buying chips, they're buying an entire development platform. For many customers, switching hardware may be relatively easy. Switching ecosystems is far more expensive. Many investors think AMD and NVIDIA are competing purely on performance, but the real moat is the ecosystem. While millions of developers already rely on CUDA, changing two chains becomes incredibly costly. That's why NVIDIA's advantage extends far beyond hardware. The bullish case for AI remains, supported by strong demand across the industry. NVIDIA continues receiving support from major cloud providers, while AMD is expanding its presence in both training and inference markets. At the same time, AI inference is becoming a major growth driver. More companies are deploying AI applications into real-world business operations rather than simply training models. This means future demand for compute could come from a much broader range of industries and use cases. For AMD, that creates an opportunity to gain market share. For NVIDIA, it means the overall AI market may still be expanding. A lot of the investors view AI as a zero-sum game, but the bigger story right now may not be who takes market share from whom. The bigger story is that the entire AI market continues to grow. There are still compelling reasons to remain optimistic about the long-term AI story. Major technology companies continue increasing capital expenditures. Data center construction remains strong. AI models continue growing in complexity and scale. From chips and servers to power infrastructure and networking equipment, nearly every layer of the AI ecosystem is benefiting from rising demand. Many analysts believe AI-related spending could remain elevated for years. This is one reason investors continue assigning premium valuations to AI companies. The market increasingly views AI not as a typical technology cycle, but as a long-term transformation similar to the Internet revolution. If AI ultimately changes the world the way the Internet did, some investments that appear expensive today may eventually look surprisingly cheap. That's the core argument behind the bullish case. However, the biggest risks may not come from competitors, they may come from physical constraints. Building AI infrastructure requires land, electricity, transformers, cooling systems, and skilled labor. In some regions, new data center projects are already facing extended waiting periods before they can secure enough power capacity. If infrastructure expansion cannot keep pace with AI demand, the entire industry's growth trajectory could be affected. For companies that depend on continuous increases in AI spending, this is a risk investors should not ignore. For years, investors worried about whether there would be enough chips. Now, more people are starting to worry about whether there will be enough electricity. For the first time, the AI industry is running into real-world physical limitations. History shows that great companies do not automatically produce great investment returns. Markets often price in years of future growth, long before that growth actually arrives. When expectations become too high, even strong business performance may not be enough to satisfy investors. Today, expectations for AI are approaching historic levels. Investors believe AI will transform the global economy, And that may very well be true, but the more important question is how much of that future success has already been reflected in today's stock prices. That is the central issue behind the current valuation debate. A great company and a great stock are not always the same thing. Investment returns depend not only on growth, they also depend on the price you pay for that growth. Looking at the bigger picture, the long-term AI trend remains incredibly powerful. Both NVIDIA and AMD continue benefiting from the global AI investment wave. At the same time, the market has already placed extremely high expectations on the future. Over the next several years, stock performance may depend not only on whether these companies grow, but whether they can continue exceeding already ambitious expectations. When everyone is telling the same story, investors should pay even closer attention to the risks that the market may be overlooking. So the takeaway is simple. AI growth is real, AI demand is real, but so are the risks. The biggest challenge may not be whether AMD can catch NVIDIA. It may be whether the AI industry can live up to the massive expectations already priced into the market. What do you think is the biggest risk ahead? Let me know in the comments. Subscribe to Stock Market Breakdown for more analysis.